we will be discussing what are dividend stocks. What are dividend stocks? That's a good question that many people who are new to the stock market are asking. I know there's a lot of intermediate level videos out there, and they assume that you know what dividend stocks are, you know what dividends are. In this video, I will be talking to you as if you knew nothing about dividend stocks, about dividends, if you're completely new to the stock market. We're going to be talking about dividends and dividend stocks as if you're starting from scratch, from the very basics. I will be explaining to you very clearly what are dividend stocks so that you can apply this information to your portfolio and to your investment activity in the stock market. So let's begin. When you're buying a stock, you're buying a piece of the company. So if you buy one share of Microsoft, if you buy any shares of stock in Microsoft, then technically you are an owner of Microsoft. So you can go walking around saying, I'm an owner of Microsoft. It's very true. It's technically correct because you bought a share of stock, which is a representation of ownership in Microsoft. So if you buy a stock, you're an owner of the company. This is important. This will tie in later. If that company is making a ton of money, Microsoft, for example, if they're making a ton of money and they don't need that money for operational purposes, they don't need it for operations, then they'll be like, we have all this money, we don't need it. Let's reward the stockholders, let's reward the shareholders this money. Let's give them cash. Let's give them money in the form of a dividend. That's what a dividend is. So basically, the company is just sending money to your brokerage account. They're sending money to your investment account in the form of cash just because you own the stock in that company. Because technically, you own the stock of the company, then you're an owner of the company. So they're just rewarding you for being a shareholder. They're rewarding you for being an owner of the company. They're giving you cash. That's called dividend. You need to know that companies will have different amounts of stock. Some companies, they'll have 1 million shares of stock. Other companies will have 1 billion shares of stock. So it just depends on the company. Let's go over this scenario. Let's say a company has 1 million shares of stock. Let's say they have 1 million shares of stock and they want to give away $1 million. You just do simple math, 1 million shares of stock, and they want to give away $1 million of cash. So for each share of stock, if you own one stock of that company, you will receive $1 of cash because $1 million of cash divided by 1 million shares of stock will equal $1 of cash per stock. So if you own one stock in that company, they will send you $1 of cash to your brokerage account, to your investment account. If you own 5 shares of that company, they will send you $1 per share. So they'll send you $5 of cash to your investment account. It's going to appear in your cash balance in your investment account. That's a dividend. You need to know that not all companies pay a dividend. It's totally up to the company. That's why when someone says it's a dividend stock, it just means that that company or that stock is paying a dividend. There are 3 key dividend dates that you need to know. There's a declaration date, there's the ex-dividend date, and then there's the payment date. The declaration date, that's the day when the company just announces, hey, there's going to be a dividend. They're declaring that there's going to be a dividend. It's as simple as that. That's the declaration date, is when the company announces that there's going to be a dividend. The ex-dividend date is the day that you just have to own. You need to be in the stock before that date. You need to hold the stock before that date, the ex-dividend date, in order for you to qualify for you to receive the dividend. So if you're like, oh, that company's going to pay a big dividend, if you get it, if you buy that stock before the ex-dividend date and you're holder on record on that date, before that date, then you will get the dividend. If you buy it that stock on the X dividend date or after, you will be disqualified from receiving that dividend because it's too late. So the X dividend date is a very important date. The payment date, that's the date that you will actually receive the dividend. That's the date that you will actually receive the cash in your investment accounts. So going in order, the company would declare a dividend. If you hold the stock before the X dividend date, then you'll get paid that dividend on the payment date. So those are the key dates that you need to know regarding dividends. You are going to get taxed on your dividends because that dividend is taxable income. Even if you reinvest the dividend or if you leave that money, that dividend money, in your brokerage account, in other words, you don't withdraw it back to your bank account, in either scenario, you're still going to get taxed on that dividend. The amount of taxes you will pay on dividends, it depends on whether they are ordinary dividends or qualified dividends. Ordinary dividends, they're going to get taxed at your regular rates. Qualified dividends will receive better tax treatments. In order for your dividends to be qualified dividends, it's going to depend on the company, from where the dividends are coming from. So things like that, that's out of your control. It also depends on if you held the stock for more than 60 days before the X dividend date. So your holding period. When you look up a stock that pays a dividend, you'll see in the stock summary, it's going to say yield. The yield, that just means the rate of how much of a dividend that stock is paying. The yield helps you picture basically the rate of how much you'll be earning. You know, for example, if the stock says a yield of 4%, that means if you bought $100 worth of that stock and you held it for a year, you would receive $4 of dividends. Because if the yield is 4%, just think about it like a savings account. So if you put $100 into a savings account and the yield is 4%, then you would receive $4 in interest income. It's the same concept with dividend yield for a stock. So if you bought $100 worth of stock in that company, then you can expect $4 worth of dividends for the year if the yield is 4%. That's the easier way to conceptualize it. So a good question is, should you go and try to buy dividend stocks with the highest yield? You know, for example, you're going to see dividends. Some dividend paying stocks, they're going to have yields of 20%. Honestly, in my opinion, if you see a dividend stock with a yield of like 20%, 25%, 30%, I see red flags. It's not that it's a scam or anything. The thing is that it just means, to me, in most situations, that the dividend is unsustainable at that level. When it sounds too good to be true, it usually is. Usually when the dividend yield is like 20%, 25%, 30%, that's very temporary. And usually what will happen is that they will reduce the dividend. A lot of times it will be reduced substantially, or many times they'll just cut it to zero. They'll completely remove the dividends. It usually is a signal of something's going wrong or something's going bad with the company. That's just from experience. So when you see something like a 20% dividend yield, just be careful. A lot of times, most of the times, it's just too good to be true. A good question is, how often do companies pay dividends? It depends on the companies. Most dividend stocks, they will be paying dividends quarterly. So they're going to be paying dividends every 3 months. It's kind of like a set and regular schedule. So it's very predictable. Other stocks, such as REITs, real estate investment trusts, they will pay a dividend monthly. So each month, they will pay a dividend. Other stocks, other dividend paying stocks, will pay an annual dividend. Other stocks, they will pay a discretionary dividend just whenever they feel like it. So it just depends on the company. Are dividend stocks the best type of stocks? Not necessarily. It just depends on your investing goals. If you're trying to go for maximum gains, dividend stocks, they're usually more mature stocks. So they're going to offer you less risk, but they're also at the same time, they're going to offer you less reward. In that situation, if you're just trying to maximize, if you have a very long investment horizon and you're trying to maximize growth, prioritize growth, in that situation, you would not want to go too heavy on dividend stocks. So it just depends on your situation. If you're trying to go for more stable companies or more profitable companies, then dividend stocks would probably be a better fit for you in that scenario. If you are new to this channel, please consider subscribing so that you can follow along with our portfolio and see what dividend stocks that we are investing in and what we are buying with our $500 investment portfolio and all our other investment accounts. If you'd like to get started in the stock market, you can also use the affiliate links that we do have. If you do use those links when you sign up for an account, you will receive a sign-up bonus. It could be in the form of cash or it could be in the form of free stocks. You can also see our other tutorial videos. Those videos are really crafted for the people who are very new to the stock market. They're starting from zero. We're also going to be making intermediate level videos about the stock market and investing as well as advanced videos. But we want to build from the bottom up and help you become a better investor. Thank you so much for tuning in, and we'll see you in the next video.